Welcome back to Profit Path. Stocks are catching their breath today after their recent gains. Big tech took a hit, Micron impressed with strong results, and oil is tightening again. Hit subscribe now for our daily market update. Alright, let's start with the market mood. US market slipped today. The S&P 500 fell about 0.6%, the Nasdaq dropped about 0.9%, and the Dow was modestly lower as well. Much of the weakness was led by tech stocks. Nvidia dropped about 2.8% and Amazon also slipped about 2%. So the major indices are now posting small weekly losses. The broad market is getting a bit shaky after its impressive run. But before we check out the latest earnings, here's a quick programming note. Our sponsor Public wants to give you free stocks when you sign up and make a deposit. Go to the link in the description and sign up now. So let's get back to the markets. Despite today's dip, investors seemed okay with Nvidia's big pullback yesterday. The stock is still up more than 6x in the past year and a half and is valued at a whopping $1.2 trillion, so some profit-taking after such a big run is understandable. Plus, the recent rally in AI tech stocks has pushed valuations in the sector to lofty levels, so some investors may be reducing exposure while others are waiting for a pullback to get in. Meanwhile, Micron Technology delivered better than expected Q4 earnings and gave upbeat guidance. That sent shares soaring nearly 10% and boosted sentiment in the chip and data storage sectors. The earnings surprise may attract more buying in the coming days, especially as other chip makers report their results. For instance, AMD and Nvidia are set to report quarterly earnings next week, which could further lift tech sentiment if results beat expectations. In contrast, Intel missed estimates and issued weak guidance, which dragged down the stock price. But the broader sell-off in the chip sector seems to be limited. So far, Micron's positive outlook suggests that the pain in the chip industry may be starting to fade, and it's not just tech stocks moving today. Oil is rising again, up nearly 2% today. A report from the EIA showed that US crude inventories dropped sharply by nearly 4 million barrels last week, much more than the expected drawdown of 1.1 million. Gasoline stocks also fell more than expected. Global supply risks are mounting too, from disruptions in Iraq's Kurdistan region to new US sanctions on Venezuelan crude. Oil's strength is helping to stabilize sectors tied to commodities like energy and materials, even as tech cools. Oil and gas companies in the S&P 500 are now posting the best weekly performance since late July. Of course, higher energy prices add to inflationary pressures, which could keep the Fed on a rate hike path. Speaking of the central bank, traders see a greater chance of a September rate hike after today's data. According to CME Group's FedWatch tool, there's about a 60% chance of a 25 basis point hike in September and a 40% chance of no change. The market is pricing in a roughly 1 in 3 chance of a September rate cut. But with inflation still sticky, another hike seems more likely. Traders will now await Friday's jobs report for more clues on the Fed's next move. So with markets now pulling back from their recent highs, key levels and support zones in tech will be tested in the coming days. Investors will watch how other chip and hardware names respond to Micron's upbeat guidance. A broader rebound in tech would signal that the recent rally isn't overextended. But for now, the sector's fate hangs in the balance as earnings season progresses. On the economic front, August trade data is also eyed to gauge the health of the global economy. China's exports unexpectedly fell, signaling a slowdown in the world's second-largest economy. Meanwhile, Japan's exports rose, offering some relief after yesterday's disappointing industrial output data. In short, with central banks staying cautious and geopolitical tensions simmering, volatility is likely to persist. Stay tuned to Profit Path for daily updates. We keep you informed so you can navigate these turbulent markets with more confidence. If you enjoyed this video, please hit subscribe now for our daily market update. Thanks for tuning in. See you back here tomorrow.